Okay, now let's tackle the second requirement on this problem, where they've asked us to prepare a statement of retained earnings for the year ended December 31st. Okay, we're dealing with the Kohler Corporation, as you know from the previous presentation, and we put together the statement of retained earnings for the year ended December 31st. Well, what's on the statement of retained earnings? It's essentially a reconciliation of retained earnings. We start off with the beginning balance, which was $270,000. Okay, that was given in the problem. Then we add the net income, and in the last transaction, we knew that net income was $388,000. That gives us a subtotal. Then we would subtract out the cash dividends declared, and the cash dividends declared were the total of the $72,000 we had declared plus the $80,000 we declared. We had two separate transactions in requirement 1 where we put that together. Okay, then we also had $1,500 that we debited or reduced retained earnings to reflect Treasury stock reissuances when the proceeds that we received on the reissuance of the Treasury stock was less than the original cost carried in the Treasury stock balance, and we didn't have enough paid-in capital on previous reissuances of Treasury stock to take care of that deficit, if you will, or difference between the current reissuance price and the historical cost of the Treasury stock. So we would need to subtract that out as well, and we were able to calculate retained earnings as of December 31st. Okay, once we put together the statement of retained earnings, we could move on and tackle requirement 3, which is prepare the stockholders' equity section. Okay, and this is just the stockholders' equity section of the balance sheet. So now, what do we know? We're back to having 40,000 shares outstanding, right? We had reacquired Treasury stock, then reissued it. So, oh, and actually, in this point, we've got the 40,000 shares issued and outstanding. 50,000 were authorized. So take the par value times the dollar amount reissued. 40,000 is 400,000. Then we had paid in capital in excess of par value and common stock of 60,000. Now that didn't change. Now we have retained earnings, which came from the requirement 2, what we just calculated on the statement of retained earnings. Okay, and at this point there's no more Treasury stock. There's nothing to report because all of the Treasury stock we acquired have been reissued. And so we're able to come up with total stockholders' equity, and that takes care of requirement 3.